Thailand cut its benchmark interest rate to 2%, its lowest level in 3 years. Welcome to Wednesday's press review. I'm Elaine Stenson. The move, which will be the second rate cut in 5 months, comes amid continuing political turmoil in the country. The cut is to encourage spending after a slowdown in economic growth. Downside risks to growth have risen in the wake of prolonged political situation, the central bank said in a statement. Thailand's economic growth has slowed recently to just 0.6% in the last quarter of 2013 from 2.7% in the previous quarter, and official Thai growth forecasts for 2014 have already been cut to about 3%. The bank noted that tourism had been badly hit. However, it added that it was optimistic about growth in the region helping Thailand's economy. Prolonged political uncertainties would continue to impede the recovery of private consumption and investment. Nonetheless, export of goods should gradually improve on the back of a recovery in major economies, the bank wrote. Exports, which account for about 2/3 of GDP, were down nearly 2% in January from a year earlier. Many Asian central banks have maintained low rates to support growth in the aftermath of the financial crisis, but also to ward off hot money inflows seeking higher yields. That equation changed last year when the US Federal Reserve said it would begin tapering its asset purchases, boosting US Treasury yields and removing upward pressure on Asian currencies. The Philippines Central Bank is most likely to increase rates next, as it has seen an explosion in money supply in the economy in the past few years, thanks to strong capital inflows from the country's army of overseas workers. And while New Zealand is not an emerging market, its economy is highly dependent on demand in China for its dairy products. The Reserve Bank of New Zealand is almost certain to increase its benchmark rate at its meeting on Thursday, making it the first developed country to increase rates in the cycle. Indonesia and India have already carried out a number of increases since last summer, and while South Korea is not expected to alter rates on Thursday, some analysts expect the Bank of Korea to edge towards a rate increase later in the year as export growth picks up. And that's it from me today, but Natalie MacDonald will be back tomorrow with Thursday's press review. Bye for now.